I think the financial services sector has been manipulating data for quite some time. They were quite bad actually at using that data and leveraging that data to take better trading decisions for their clients, but also to better execute. And I think this is where, and with the amount of data that we have out there, we actually start to need tools to be able to manipulate this data, and which is one of the reasons we thought at Quad then we needed some tools to manipulate the data using machine learning techniques, for example, so that our clients can take more educated and better decisions for their trading.
With the volume of data we have right now, it's really difficult to have a non-machine learning algorithm handle all this throughput and giving relevant insight. So machine learning helps us to scale with the data we have, and it enables a whole branch of new use cases like trying to predict the volume of an instrument, trying to compare two financial instruments to use quite complex execution strategy. In the TCA we have two kinds of data. So you have data specific to an order, so the order update, the quantity of an order and so on. But you also have some market data that is coming in real time for different exchanges. So the client can in real time compare how well his order is doing against all the other market participants.
The more data you have, the more transparency you get. I mean, you can see all the various projects that you have out there, open government or things like this, that are opening the data to a wide community so that everyone can be a judge of whether the decision is the right one. I think this is where trading is going. You're going to be opening the decision why you took a decision, in which market condition to your clients. So you have tools like transaction cost analysis, TCA, which are actually very useful for that, where you want to assess the impact that your orders actually had on the market. And you can, by analyzing this data, you can actually take better trading decisions as well.
There are two levels on which we could actually act to improve TCA and automation. There is one level of data analysis, making dashboards, extracting KPIs, extracting key indicators, etc. And the second level is, when having that, try to model some targets that we want to meet. Let's say, for example, VWAP or a TWAP algorithm that we want to automate at some level. We can have one step ahead of the market and of real time using predictions to make strategies. There was a time when, to speak about data science, we used the word data mining to extract valuable information, very precise and well-targeted information within the data to support decision.
Machine learning in general is the solution to being able to manipulate data, wide data. As a human, it's too complicated to be able to assess and analyze all that set of data. Machine learning has been around for a very long time. The theory behind machine learning has been around for about 30 or 40 years. It is just that now, with the current CPU power, we can actually use what used to be a theory into practical use case. And the practical use case is machine learning is actually the solution for inflation of data. How can we make sense about that mass of data that we have everywhere?
The pegging algorithm actually is trading a strategy that tries to follow the market trend and to match orders, keeping in mind to be as passive as possible on the market. So the pegging algorithm before was a statistical model, and the thing which we changed about it is that we incorporated within it some intelligence. So it is today fully automated strategy supported by machine learning and AI.
I think it allows the traders to be focusing on what is complicated and difficult. Yeah. There are plenty of orders out there that you're dealing with your clients that are not complicated trades. They are easy trades to do. For these ones, you shouldn't be using someone's time to be doing this. This is where automation is actually coming into play. At the same time, automation is also removing the bias that you can have in some of the trading activity. You are doing something in a predictable manner all the time with predictable results, and I think this is what becomes very important through automation.